The nickel market, let's talk about it. I agree with you. I think there was a resurgence towards August, September last year. Then I think, as predicted, the scrap kind of came into the market, affected pricing, but it was expected. And you would have thought that the price would have sort of recovered kind of mid-year this year. But COVID-19 comes along. I mean, what's that done for you guys? What's it done for the nickel market, more importantly?
Well, no, for exactly. We talked last October, early November, and definitely, we thought the market had been a bit overdone. In the summer of 2019, Indonesia announced they were going to pull forward that ore ban, which is still in place. And on the back of that announcement, nickel price took off, inventories fell down. But when you looked at the stainless steel market, it definitely didn't seem to be translating into demand on it wasn't coming from demand on the stainless steel side. So definitely thought there was probably going to be a bit of a weakness coming into Q1, Q2 of this year. Mm-hmm. Of course, with the impact of COVID on top of that, obviously we're definitely seeing that now, both in nickel inventories as well as nickel pricing. Nickel prices being held currently somewhere in sort of the $5 pound range. We've got inventories that have increased over the last 2 to 3 months since January into about 230,000 tons of nickel on the LME. However, we look at that and there is definitely an impact from COVID, but, my personal opinion and just, when you look at this market, I think we will get past this. Fundamentally, the longer term the basic fundamentals longer term remain strong. We have seen a deficit in the nickel industry for the last 4 years, and that was even before the Indonesian ore ban. We'll probably see a bit of a surplus this year. However, that's directly related to this slowdown from COVID, and, we will catch up to that. Fundamentally, there's been a 10-year period of lack of exploration in the nickel sector. There really just hasn't been anybody out there looking for nickel, and there's been a lack of investment in the nickel junior side of things, as well as even the major companies weren't spending the money on exploration that historically they used to do. And really what that translates to is that we're going to see a delay between finding new nickel projects and being able to bring them online.
If I may, just interrupt, because there's a bit I don't want to forget to ask you, which is, if we stick around with the impact of COVID now, obviously it's impacting people's ability to work now. People are being restricted to their homes. I think mostly globally, most people are adhering to that. It's affecting people, family businesses, small businesses, their ability to earn cash. And I think some governments are stepping in, some governments are not. I mean, surely that is going to have an impact on people's buying behavior, which is going to have a knock-on effect into the metals market. But do you see that as a short? I know you're used to dealing with tens of years for these types of large nickel projects, but do you think that's a kind of short-term impact, or do you see that not really affecting the way that large plays like nickel tend to want to plan their operations out?
Yeah, no, I mean, I think definitely we'll see obviously a short-term drop in consumer demand. People aren't shopping. I think, I've seen some graphs that show just a hugely dramatic drop in people's buying and people's shopping, which absolutely will have an impact. The stainless steel market, most nickel produced today goes directly into stainless steel. That stainless steel is generally used for infrastructure projects and things along those lines. So one of the things that I think will be interesting to see is, in terms of government infrastructure spending and stimulus packages, how will that really impact the nickel market and the economy moving forward? Nickel, in the ramp up in 2007, most nickel came out of the consumer goods space just because of the price of nickel went up to $25 a pound and it became too expensive. So when we look at, consumer buying, for sure that will impact the demand on nickel. However, I think, I'm kind of interested to see what happens once we get out of this initial COVID crisis, a month or two from now, when governments really want to stimulate their economy. I think they've already talked about stimulation in China, and China's sort of come out of the initial COVID lockdown and they're starting to see manufacturing again. I think that would really help nickel on the stainless steel side, and I think that could be a real positive as we move into Q3, Q4 this year and maybe into next year. And I think on top of that, the whole lithium battery growth sector and the EV market and energy storage market on the battery side of things, I still think is a very exciting place in coming forward. And I also think that some of the interesting things that people have seen with this slowdown is really the improvement in the environment in cities, in the improvement in pollution and smog, without all of the internal combustion engines driving around. So once we come out of that, I think people might look at how to do things differently, and potentially that could speed up that demand for electric vehicles, as well as the demand for battery storage.
I love that argument. I think that's so true. I think that is so true. I think people will behave, think, act differently after this, because it's going to affect people psychologically. I think we haven't had anything like this in the Second World War. We haven't been held captive. We haven't been worried about food, toilet roll. Toilet paper. I had to throw that in there. Energy. Seeing friends. All of those things you take for granted. And yes, some of the benefits. The main beneficiary here is the fact that the world is possibly a little bit cleaner as a result. We're seeing rivers and waterways, the Thames included, making a huge recovery there. So it is fascinating. So I like that argument. Probably worth exploring more. But I want to talk about you today. So given that world, that picture that you have painted for us, we've spoken to a lot of nickel companies recently. They've all been telling us they're top 10 nickel company, definitely a top 10 at this, that, or the other. How are you positioning yourselves? Because you talked about completion of the feasibility study end of last year, which is great. You've talked about having conversations in the past, and obviously you're working with Waterton there. So what are you doing? And I guess what's been happening since we spoke to advance things within Dumont, with Dumont? Okay,
I'm gonna. There's a pile of different questions in there, and I think we should get to all of them. So I'm gonna start looking at competition. How are we differentiating ourselves? Mm-hmm. Like you said, you've been talking to lots of nickel companies with the sort of run up in nickel there, and a bit of some tailwinds behind nickel. We're seeing more and more nickels companies, or companies that were focused on other things, now looking at their nickel assets. For us, I think we have quite a few strengths, specifically around Dumont. One, jurisdiction. We are in the Abitibi mining region of Quebec. We have an educated and experienced regional workforce for both construction and operation of the project. The project has amazing infrastructure. We have water, we have a rail line that's on the property. We have an all-weather highway right beside the property. And we have very competitively priced green hydropower, which is located 8 kilometers away from the project. So that's, that piece that allows us to be structurally low cost just because we're in the right region. Our timeline to construction, I talked a little bit earlier there where I gave a little bit of the blurb, the overview of Dumont. We are both federally and provincially permitted. We have a recently completed feasibility study. And so, with those pieces, we are ready to start construction. So for investors that are looking to hit the next upswing in the nickel cycle, we are perfectly positioned for them. The asset itself is a large-scale, long-life asset. I've previously spoken about the nickel market and how volatile it is. Dumont is a 30-year project that on average will produce 39,000 tons of nickel annually. The long life of Dumont really allows investors increased certainty about hitting several price cycles over the life of project and maximizing their return. If you've got a 5 to 10 year nickel project, you could theoretically build it and miss the price cycle at the time where you need it to pay back your investors. That 30-year life and then plus upside after that really, I think, adds something to our story versus other stories. And then finally, I think one thing that we don't talk about enough that I'd like to start talking about with Dumont is really the green side of things. So not only will Dumont produce nickel and cobalt to supply the low carbon energy storage industry, it's also a very low carbon footprint project. 100% of our electricity is hydro sourced. And we actually increased the electrification of the project in the updated feasibility study to include trolley assist for our haul trucks. What that did is actually reduced our diesel consumption by over 500 million liters over the life of the project, or by almost a third, this gives us the advantage. So when we're talking about to potential investors, many of these investors, especially based in Europe, have carbon footprint ESG requirements for some investments. So I really think that helps us, and that is definitely something that we are allowed, that we can take and we can bring to the table over other projects.